is joining us on the show to talk to us about that. Nitin, it's a bit dichotomous, right? I mean, if you look at the order wins, and you just had a flash coming on the screen for Tech Mahindra as well. HCL Tech has bagged a few orders, Infosys just bagged, and even the quarter gone by, the deal bookings were rather strong for the company. Somehow they're not converting to the revenues. What's your take?
Yeah, thanks for having me on the show. So at Fitch Ratings, we've recently revised our revenue growth forecast for the Indian IT sector to 8 to 10% in the financial year 2024. That is on a constant currency basis, and that will come down from a 16.5% which we experienced in the FY23 financial year. Now, what's been happening with the Indian IT companies is that they are affected by the global slowdown in the IT spending, primarily because of the weaker economic conditions in US and Europe. So Fitch has revised the growth forecast for US, which is about 1.2% this year, and 0.8% for Europe. So most of the customers for these companies, which are obviously based in US and Europe, they have lowered down or slowed down their global IT spending. And that's the reason why we believe that overall, despite their adding new customers and their order book pipeline remains quite robust, the growth will come down to 8 to 10%.
When you're having conversations or even analyzing the publicly available data of these large IT companies, the premise on which you have cut their guidance, cut the estimates, is it more durable? Could it be more prolonged, or does it appear, sitting now analyzing the data, a little transitory in nature?
Yeah, thanks, Ajay. I think what we have seen in the last few quarters is that one is that wage inflation was very high, and these companies have under their cost of index, they call it COLA clause under the contracts. They're trying to pass on to the higher cost to their customers. So that is gradually happening. They are passing on the higher cost to the customers, and they're getting a better pricing. But that's a very gradual process with the customers. Now, the overall the trend in the industry has also been that the big projects are not coming. So the customers which used to give the big bang projects to one particular IT vendor, that's not really happening in the past few years. While that has been broken down into smaller projects to these companies. And I think that is also partly a reason why the growth is slowing down. While the mortgage business, the BFSI sector, is also a bit slowing down in the US and Europe, given the high interest rates, and the mortgage services are affected by that high interest rates. But nevertheless, I think 8 to 10% is still a very high growth rate for the industry as a whole. And I think FY25 would be a much stronger year for the Indian IT sector.
25 will be a much stronger year, but Nitin, you're saying 8 to 10% is still a very reasonable growth. Is there further risk on the downside, do you believe? Is there a chance that you'll be looking at cutting the growth estimates further?
Now, I think the main risk is that if we see a further slowdown in the US and European markets, and as you would know that contrary to most of the economists believe, the recession does not seem very deep in US and Europe. It looks like that we are going to see a mild recession in the fourth quarter or the next first quarter of 2024 in US. So if that base case scenario pans out, then I think 8 to 10% will hold, and there could be a risk to the upside. So the growth could be higher. But if this base case scenario doesn't play out and we see a recessionary conditions which are much deeper than we are forecasting, then yes, it will further impact the Indian IT sector, because then the customers will really close on to their IT purses and will not spend as much on the IT spending.
So that's the risk that you have to deal with, a deeper recession. Would have loved to chat more with you with respect to how the AI is going to disrupt the Indian IT sector, but perhaps we'll do that at a later stage. For now, thank you so much, Nitin, for making time and speaking with ET Now. Actually, it's time